Okay, the next section we want to cover here on the spread scanner filters is the Monyness section. And as you'll see here, it's defaulted to any. Okay, so it's going to show you all the spreads available based on what other filters you have. With any, it's not going to filter anything out. And then you'll notice we have all these different options here. Okay, what the Monyness section has to do with, it's all about the indicative price. So this example here of the euro dollar, the Nadex indicative right now is at 1.10728. Okay, that's where the current underlying market, the current Nadex indicative is. All right, and then on your different spread contracts, as you know, all spreads have a floor and a ceiling. Okay, floor and ceiling. So if we want to see all of them, we leave it to any. ITS right here, if you just kind of put your mouse over it, it will say in the spread. So if we click that, notice it filtered our options a little bit. And what that means, all of these options here have to do with the indicative itself. So if I do ITS, which is in the spread, that means that the indicative, okay, is within the spread, meaning it's between the floor and the ceiling. Okay, so you notice 1074 is in between all of these. This is 1010 to 1110, so 1074 is in between there. 1060 to 1160, 1074 is in between there. So that means the current indicative is in between the floor and ceiling of these particular spreads. Okay, if we were to go back to any, notice it adds a few here, right? Look at this one, 960 to 1060. Well, 1075 is higher than 1060, right? So in this particular case here, the indicative was not in between, it was not in the spread. It was not in between the floor and ceiling. It's higher. So if we do in the spread, it takes those out and only shows us spreads where the indicative is currently in between the floor and ceiling of the spread. If we go right here to the next one, you'll see it says deep in the spread. Okay, now notice how that filters out for us. Again, this is all about the indicative. Basically, this means the indicative is above the ceiling on the buy side, or it would be below the floor on the sell side. Okay, so once again, the indicative is 1075, and look here, the ceiling's 1060, 1070, 1050. So deep in the spread would mean that it is, the indicative is above the ceiling on the buy side, or would be below the floor on the sell side. There just doesn't happen to be any right now on the sell side. The next one, NTM, near the market. Okay, what this means is not only, this is not just narrowing it down between the floor and ceiling, but this means that the current indicative is close to where the current market is. All right, meaning the bid or offer of the spreads, okay, like right here, bid and offer. The bid or offer, okay, this kind of refers to the price more than the floor and ceiling. Okay, this is not necessarily, this particular one is not necessarily focused on floor and ceiling so much as it is the price. The bid or offer is near, okay, the indicative, within 10 ticks. All right, so that is what near the market means, is the bid or offer is within 10 ticks, it's near the current indicative. That way if you're trying to find a spread that's as close as possible to the indicative. All right, then we have OTS, which is out of the spread. Okay, and notice again, we click that filter, filters it down for us. Now once again, it's all about the indicative. Basically what this means is that the indicative is above the ceiling on a sell or below the floor on a buy, kind of the opposite of what we saw earlier. Currently right now there's nothing on the buy side, but what this means is that the current indicative would be above the ceiling on a sell. Once again, you have 1060, 1070, and 1050, but the market's up here at 1074. Okay, so it all just depends on where the market is at the current time as far as what results you're going to see as far as deep in the spread on the buy side or out of the spread on the sell side. And then these last two options are a combination of a couple of these. You can choose to see two different things. For example, right here, this is in the spread or near the spread. Okay, so what that means is it's going to be a spread where the indicative is within the spread. The indicative is between the floor and ceiling, okay, and the bidder offer price is within 10 ticks of the indicative. All right, so if you're looking for a spread that, you know, the indicative is between the floor and ceiling and the bidder offer is real close to the current market, you could use those two. This final one here is the combination of out of the spread or near the spread. Now, these are very few and far between. You won't find these a lot, but when you find these, you know, the ones that are out of the spread but still within 10 ticks of the market, okay, that means they're going to be a very low risk spread. Okay, you're not going to find a lot of them, but based on the market movement, you can find them at times, and they're very low risk spreads. So that is how this section here works of Monyness. You can do any to see everything, or you can narrow them down based on what you're looking for according to your strategy or system.